What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and today the markets looked like they turned around and stopped their hemorrhaging right at the point where it was announced that the Federal Reserve would finally start purchasing individual bonds. Up to this point, they've been purchasing bonds through purchasing ETFs that hold bonds, and now they're going to be purchasing individual bonds through the use of their secondary market corporate credit facility. Now, this brings up the question, how is the Federal Reserve able to do this? Because according to law, the Federal Reserve is specifically prohibited from buying anything that is not backed up by the Treasury, that is not guaranteed, the value is not guaranteed by the federal government, things like treasuries or mortgage-backed securities. So today we're going to dive into exactly how the Federal Reserve is doing all these purchases that they've been doing, like the ETF purchases and now the individual bonds, the loophole that they're using, and whether or not they are breaking the law by doing this. Let's dive in. All right, so the last couple of days, the markets have been in a little bit of a sell-off. Looks more like a technical sell-off, really. This is the first time, just a couple of days ago, right before the market started to sell off, it was the first time that the relative strength index, RSI, had gotten above 70 on the S&P 500 since January before the crash. And so a lot of this has just kind of been, hey, when, there's kind of like physics in markets as well. And so when you have just such a strong rally, when you have the market go up 50% in 2.5 months, you have to have a little bit of reprieve. You have to have a little bit of consolidation. Some of the weak hands that have accumulated, getting shaken out. Some of the people who are looking for an out starting to sell, profit taking. And so I wasn't surprised at all by this, and this recent sell-off hasn't changed my mind on my outlook. I made a price targets video a week or two ago that you can take a look at. I still expect within the next 2 months or so market to hit all-time highs along with gold, and we could even see a giant FOMO rally, euphoric rally after that before the big real crash towards the end of the year. So my outlook on that has not changed at all. This is something, things never move in a straight line. And it's not, the market has not been and will not be going up because of good economic data coming out. It'll be going up in spite of how bad the economy really is. Really driven by the liquidity being provided by the Federal Reserve, creating money out of thin air. And a lot of the money that the Federal Reserve has been creating and printing has been going into asset purchases. Now, per the Federal Reserve Act, the Federal Reserve is only able to directly purchase things whose value is guaranteed by the federal government. So treasuries are the biggest thing they buy, and during the financial crisis, the government guaranteed the value of mortgage-backed securities, so they can buy mortgage-backed securities as well. But something like a regular old corporate bond is not specifically guaranteed. Its value is not guaranteed by the federal government. So how is the Federal Reserve actually able to make these purchases of buying individual bonds? Well, they use something called special purpose vehicles. They're basically these loan facilities that they've established, but they're actually held at the Treasury. So the particular special purpose vehicle that we're looking at today is the Secondary Market Corporate Credit Facility, SMCCF. I think if that's the acronym, if I did that right. And these are just, back when the crisis started unfolding back in March, you remember the Federal Reserve opened up 7 or 8 of these. There were all of these acronyms that are just designed in order to make it easier for the Federal Reserve to get newly printed dollars where they want them to go. This is just one of those examples that they've created this program, and because by law, the Federal Reserve on their balance sheet, they're only able to directly own things whose value is guaranteed by the government. And so corporate loans are not. And so they've established this special purpose vehicle that is held at the Treasury. The Treasury then is the one that owns and purchases these. It's funded by the Federal Reserve, printing money, swapping that for treasuries. It's funded by the Federal Reserve, the new money that the Federal Reserve has created out of thin air, but it's held at the Treasury. Now, what are the actual implications of this? Is this bad? Is this good? Is it neutral? Well, there are 2 main implications from this. The first implication implication is that it inflates asset prices very, very easily, and that's pretty much the direct purpose of this. And the second implication is that it opens the door for other things that the Federal Reserve is not really allowed to do, but it opens up the door for them to use loopholes like this in order to do things to accomplish goals that they're not supposed to be able to accomplish. So let's dive into each of these in detail. The first one, it inflates asset prices. So how does the Federal Reserve purchasing individual bonds inflate the price of the stock market? Well, there are a couple ways that this can happen. The first way that this can happen is by keeping bad debt elevated at high prices. And so if I'm a company, I'm a bankrupt company, or I'm close to bankruptcy, or I've been hemorrhaging cash, it allows me to continue to take on new debt at really, really low interest rates that I would not normally be able to if the market was free to function as the market would just function naturally without outside intervention. And you'll have to go back and watch my video completely explaining the functioning of bonds, their price versus interest rates. If that part doesn't make sense to you, I'll link that video in the description below. But ultimately, when you have a buyer coming in who is basically, they're printing money out of thin air, they're creating money, and so they're not using money that's been stored up by savers or built up by investors. They're creating money and they're using that money to go in and buy up debt. And so buying up debt at higher and higher prices, they're becoming the buyer. They're putting a floor underneath any selling, so they're not letting the price of those bonds go down, which means the interest rate stays down as the price of the bonds stays up, because they're inversely correlated, price versus interest rates. And so it allows all these companies, they wouldn't be able to afford to get new debt if they had to pay 5%, 10%, 20% on interest, and the free market normally would charge them that much to loan them money because they're not making any money. They're not profitable businesses. But because there's somebody else who's coming into the market and they're issuing all of this new money to buy up all of this debt, it makes credit flow into companies that wouldn't otherwise be there. And credit, that's new cash coming into the company. They're able to issue debt and get this money in order to do things for their business. So that's the first way, is that you have that if you've seen on the news at all, they're talking about zombie companies. That's what they're talking about. It's just new money that's flooding into the system, whether it goes through banks. I'm obviously distilling the process here a lot just for the understanding of the mechanics, but ultimately, when you have a bunch of money flood into a system, it propels the existence of zombie companies and allows companies whose value should be a lot lower because they're not profitable businesses, or they're very close to being not profitable, and they're hemorrhaging cash, they've got a lot of debt. It allows them to continue to roll along because they have access to all this cheap money. Now, the second thing, that the reason this is bad that the Federal Reserve is doing this, participating in kind of this loophole to hold these securities and these special purpose vehicles at the Treasury, is really because of the door that it opens and the possibilities that it allows them to do in the future. Because right now, they're technically making purchases of things that they're not supposed to be able to. They're just holding them in a different way to get around the letter of the law. Now, this opens up the doors then for them to purchase other things other than bonds, such as equities. They could buy shares of equity ETFs, or even straight up just shares of stocks. Now, the probability that the Federal Reserve will do this, at least at this point, in my opinion, is fairly low. I don't think they'll take that step yet. Other central banks around the world have tried this out. I don't think at this point yet the Federal Reserve would try and do that, unless things start to get really, really bad, and just them buying credit isn't enough of, having enough of a stimulating effect on the stock market to keep asset prices high. And so if it does come to that and things start to get much worse, then I might change my opinion about that, a little bit down the road. At least right now, I don't think they'll do it. But down the road, if they decide to do this, the reason why this is so important is because technically, when you own shares in a company, it's not just an ownership stake for, an investment. When you start to own a large enough portion of a company, you become a controlling owner of that company. Shares, or at least most most companies don't have their shares split up into two different share classes for voting shares and non-voting shares. So most companies, if you own shares of that company, you can vote on things, how that company operates. Now, I don't think I have to explain to you guys why that's a slippery slope for the government to start getting involved in direct ownership and having controlling ownership stakes in companies. And if the federal government, through the special purpose vehicles held at the Treasury, if they're starting to accumulate shares in private companies and the money they're using to buy shares of these companies, it's not coming from investors or even taxpayers or savers or them earning revenue, it's just coming from them creating money out of thin air, they can buy up at least 10% of a company like that and have a controlling stake in the company. And yes, obviously Congress can make laws about what companies, in the entire country, what all companies can and cannot do. They can write laws whenever they want. That's what Congress does. But the federal government having the ability to directly control individual companies without actually having to pass legislation and pass laws and go through the voting process and the gridlock system designed, by our founding fathers to stop things from happening really fast in the federal government. That's kind of the design of having all these checks and balances, is to make things hard to accomplish for the government. When that starts going out the window because the government becomes a controlling owner in individual companies, that's when things start to get pretty scary, in my opinion, because they can just, they think Google's too big, bam, we become a controlling owner and we break you up. You think Amazon's too big? Bam. We think we want companies to start doing things that fit political agendas instead of just out of profitability. Bam. We can start forcing specific companies to do this. So ultimately, like I said earlier in the video, the probability of these things starting to unfold, at least right now, I think is relatively low. I'm not actually worried about it right now. But what the Federal Reserve is currently doing by circumventing the letter of the law, 100% is leaving the door open for something like this to unfold later. But let me know what you think. Do you think something like that happening is likely, unlikely? What are your thoughts? Do you have any questions? Anything that you disagree with that I said? Let me know in the comment section below. And if you haven't already, hit that like and subscribe button if you like the video. It really helps out the channel. Thanks so much. You guys have a great day.